The stock of the day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
So we are in Investor Day season, if we want to call it that. And what we had today, or have today happening, is Wesfarmers. CEO Rob Scott calls this week's rate cut welcome news, but is acknowledging that many consumers are doing it tough, saying the rate cut will ease pressure not only for household, but many businesses that are important customers of ours. So he does reckon it'll take some time to flow through. Meanwhile, he says that the full impact of US tariffs on its battery value chain remains unknown. Wesfarmers expects lithium pricing to remain depressed in the short term as the market remains oversupplied, expecting losses at its lithium business to be around $60 million. Separately, Rob Scott says 6 of the planned 10 new Officeworks stores in FY26 will be net new stores. Wesfarmers continuing to roll out its popular Anko brand at Kmart, with Scott saying there are plans to open more Anko branded stores in the Philippines. Share price is down by pretty close to a percentage point, so that is underperforming the broader market just past noon here in Sydney. Guys, I had a guest on yesterday, David Novak from Wealthwise Education, who reckons that Wesfarmers is in a bit of a bubble, but still, momentum is behind it. How do you rate Wesfarmers now?
I'd agree with him. It's, in my opinion, a complete bubble. I mean, here we have, though, one of Australia's great conglomerates. Return on equity, north of 30% and north of 20% for the last 5-6 years. And an incredible stability of sales and earnings. The problem with that stability of sales and earnings is it's been stability while generating flat earnings. In other words, for the last 6 years, Wesfarmers has been perfectly great at keeping itself the same size, despite inflation in that period, effectively eroding 20 or 30% of the value of those dollars of earnings to you as an investor. And yet, despite that, the market has it trading on a PE of 36, which is right up near the top of its historic range. So I think it's a wonderful company, but I certainly wouldn't be rushing to buy it right now. Whether you want to sell it, that's a question of whether you can find something better to put your money in, as many of the companies we'll be talking today, I think, are probably in that bubble territory. So it's a hold from me and watch this space.
Have you been invested in Wesfarmers?
Many years ago.
Yeah, okay.
It's been a long time since. And really on that basis that it's been going effectively nowhere for a decade. A great business. I think it's one of Australia's great success stories in retail. But if you're a business that cannot generate earnings that grow faster than inflation year after year after year as an investor, that's very, very hard to make long-term gains.
Got it. Thank you. That's Wesfarmers for Tip Group. Mark.
Yeah, we discussed this yesterday on the close. And I agree with Dave Novak as well. This momentum and the systematic trading algorithms that follow it in, and the passive into ETFs and the growing ETF market, means that these large caps like CBA, Wesfarmers, etc., they just by default get 11 cents in the dollar for CBA, and probably somewhere around 4 or 5 or thereabouts for Wesfarmers as well. So that passive inflow is sort of keeping it up. But look, realistically, I think there's better opportunities elsewhere. Those two companies in particular, the Mag 7 are all cheaper than these guys, and I think the AI thematics are far bigger growth thematic than what Wesfarmers is going to get. Lowe's overnight, which is the Bunnings of, I guess, the US, had really disappointing earnings and got hit. Probably ahead, where US is always ahead of us, obviously, as well. I don't know how tariffs are going to affect that Anko brand, obviously being really low, a low cost, but that it's, whether that sort of pushes, potentially, because I think most of it's manufactured in China, whether there's going to be a big hit on whether that starts to go into the US as well. So,
but Anko's not. Is Anko in the US?
They're going to push.
They plan to push the US. Okay.
That was part of the plans. Yeah. So great company, just way too expensive for me, and there's a lot of better opportunities. Similar philosophy with CBA. Look, I'm happy to watch it go up. That's fine by me. We don't short, so it doesn't really bother me. But in terms of getting growth, I think there's just higher probability growth or wealth winners in the market at the moment, particularly in the US, which you can get via an ETF, etc. That have got far better long-term prospects than, from a growth perspective than Wesfarmers. But if it dipped, absolutely on the bid. High quality company, but it's going to have to dip a long way. So Same, yeah, as I said, same with CBAs. So I look, hold it if you've got it. It depends on your time frame. I think it'll be fine long term. If you're worried about the market, I would be selling, and I think the cash will be quite valuable in case we do pull back.
So if you had Wesfarmers right now, and I know that this is, and now I'll do my disclaimer, not personal advice. We don't know what your portfolio looks like. This is information only. Do your own research, but are you a seller today? Would you be looking to take profit?
I'd sell at $10 ago, to be honest, and we would have switched to something else. So
got it. Thank you, guys. That's Wesfarmers, our stock of the day.
The stock of the day was brought to you by IG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at IG.com.